Dale. Ira Epstein with your SPDR ETF wrap-up, and this is for a wild trading day on Thursday, the 27th of February, 2020. What a way for me to get back into the office after some eye surgery and to have to go through this, but it is unbelievable. We had a few markets that were up today: GLD, the yen, the Euro currency ETFs, and TLT. That's it. The rest of the board in the red. And what we're in right now is a COVID-19 panic moment. The market is looking for the other shoe to drop in the U.S. The president spoke last night. The influence of that speech, because I was in the office as it was happening, still writing my newsletter, and I'm watching, and we didn't even get a bounce. Not much he can do. This is nature, not about the president. It's not about the Fed lowering interest rates. There's a time and place for that. This is neither of those. Nobody can do anything. This virus is coming in. We've done as much as we can on sealing our borders, protecting ourselves as best as we can do it. But every continent, but I think they said the Antarctic, has the virus. That's the important part. It's moving around the earth. Let me share something with you. I'm in my 70s, right? You can see it. And to make a long story short, I grew up in the age of polio, measles, chicken pox. I survived. Most people did. Back then, you didn't go to school if there was a measles outbreak. They shut the school down. Polio, oh my God. I remember getting polio vaccines, Dr. Salk doing it all. Well, go back hundreds of years to the plague. That ran its course too. So what I am saying to you is these events, they're natural events, they occur, and you don't become a wise guy trying to figure out, oh, here's where the market's going to do this or that. Your second issue you have is you're at the mercy of the news when you go home on Friday night for whatever's going to come out on Saturday or Sunday. Is it going to be good news? I don't know. Are they going to announce more bad things? I don't know, nor do you. How do you protect yourself one way or the other? Got to think that through. So as you take a look at this market in the technology sector, we've gone from a bull market all-time high on February 19th into a big crash in this market. So got over a 10% break. You're in a correction mode. When you take a look at the technology sector, SPDR, on the swing line, you have a higher high, lower lower, do you? No, you're in a downtrend now. You got lower highs and a lower low. So until the market gets over 94.72, we have a pattern we can identify, and that is the number that would neutralize on this leg down, this downtrend. That's the number that I write down. The market held the first challenge of the 100-day moving average of closes. A big number that traders look at in ETFs and SPDRs is the 200 moving day average. That's a bit lower, about another $3 under the market. In terms of Bollinger Bands, markets normally stay within them 95% of the time. I don't care if it's a disease or not, that's the norm. And right now you're under them. Yesterday, the market finished at 92.70, under it, so that's 2 days in a row, 3 days in a row under it, and on this day you were over it. You know, typically, all I can say is typically you don't go more than 5. So I can make an argument you're going down again, and maybe you're down into early next week. Hard to know. What about the slow stochastics momentum? Oversold as can be. Not even trying to lock in like it did when it was bullish back here and you're getting those highs. Not even there. Just an oversold market that's gone into a downtrend in a vertical price drop. When we come to the industrial sector, lower highs, lower lows, down. You're in a downtrend. The 200-day moving average was okay for 2 days. The market decided to say goodbye to it. So this market is now also in a correction, as defined by over 10% down from the recent high. Now, the energy sector has been in trouble for a long time. Unlike the February date where so many of the different SPDRs, ETFs peaked out, in looking back, and it's only 8 days ago, this market's been in trouble all the way through, and it's been staying most of the time under the 18-day average since the beginning of the year. No way to know where it's going to bottom out. It's getting excessive. It's got a number of closes now under that lower Bollinger Band, but you're not at 5 yet. QQQ. The market held the first combination of a challenge of the lower Bollinger Band. It's held it for 2 days. Now it's moved to the next support level, which is the 100-day. If that gives ground, I think traders will be really looking hard at the 200-day at 198.32 right now. The next one to look at is emerging markets as well, and we know they have taken a swan dive. These markets peaked out back here in January, and they haven't looked forward. Do you remember the play of the year? Own emerging markets, own the U.S. dollar. I can go on. No, be bearish the U.S. dollar. That was it. I don't think anybody was guessing interest rates were going where they're at to new all-time lows in the 1, 2 and a fraction area. In GLD, we are fighting at the upper Bollinger Band. The market got 5 days in a row over it. The odds are it's not going to stay a 6th day. And you've had that pullback. It's not a downtrend. The trend is still up, but the market's in a corrective mode in momentum. You have momentum pointing down, prices trying to hold, you have divergence in the market. Let's assume you take out 150, 290, just for the sake of it, instead of staying up. Okay, I still see next support at 150 and a quarter. So that's what I'm looking at. What about upside? Staying over that Bollinger Band's a real son of a gun, especially when the bands have widened out. At least here they were very narrow. The wider they are, the harder it is to stay over them. When we come to GDX, today was the killer day for it. You had an outside day down that puts lower highs, lower lows. Next support, somewhere in here if it wants to continue, 27.93, 27.04, where the 18-day average is the first resistance level. TLT, everybody is buying U.S. currency, U.S. debt. It still pays better than most of the world debt out there from a country of our size and as strong economically as we are. We know that people are nervous. We know that they're just putting money in here, and that is something that you see right now. When we look at the euro, big repatriation. Listen to that word. I think repatriation of currencies is going on. The stock market's fallen. People might have gotten out, and they're saying, send me my money. I'm petrified we're in a recession. I'm petrified of COVID-19. I need more money in my bank to get through the problem. It's not about protecting against the recession or anything right now. There's just fear. So I understand that rally, and I'm looking for resistance up here in the Bollinger Band, upper 100-day average of closes, which is there. In the XOP, this is the last chart I'm going to do. This is the oil and gas exploration spider. Look at how this market has gone into a collapse. It makes sense. The world is awash in energy right now because so many of the economies are shut down because of virus, shut down or lower because of recessionary events taking place, and certainly manufacturing around the world getting hit as we have to get through this period of time as the virus runs its course. I wish there were a vaccine for it. I don't know of any, nor does anybody else. We'd hear about it. Remember, if you'd like to get my Spider ETF video, which I normally put out about 4 o'clock in the afternoon each day, you go to our website and you sign up for a free trial. It's under free offers. You'll see all the different offerings. We'll be happy to get you on it. I'm Ira. You have a good day. I'll see you all tomorrow.